JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 12th of January 2021. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff, guys. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay guys, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com. And yep, click on the research tab right there on the top, guys. So now then, jumping into the charts, guys. So the first one I want to pick up here is Nikkei 225. To be honest, in general, today is not really a very exciting day in terms of economic data releases. So not much. We don't really have much on the calendar. The main things, of course, what to focus on will be the whole kind of political situation in the U.S. and of course the vaccinations and how those are getting along, because if we start seeing any hiccups in that field, on that front, well, I mean, maybe this could bring the markets a little bit to the downside. So far, as you can see here, Nikkei, for example, is continuing to move higher. As I mentioned to you guys previously, that my next target is the 29,519 level, which is if my memory doesn't disappoint me here, I think that's the low of May or April of 1990. So for that, I need to jump into a monthly chart, guys, right here. So there we go. So as you can see, this is the lowest point of May of 1990. We are currently on track in terms of kind of well, I wouldn't say on track actually, but we're in the right direction, in the direction of that level. Now, of course, the big question here is, will it actually test it? We are only around 1,300 something points away from that area. So in a way, to be honest, it's not a huge problem for this index to do this route, this distance in a month. Because, for example, here you can see that in November, for example, November was seen as a huge explosion here to the upside, where we managed to even actually kind of gain around 3,000 points. So that's what I'm saying. So that's why I don't see this level here being as a huge problem to be reached. However, of course, let's not forget that looking at even at this monthly chart, we already had quite a decent up move here to the upside. But of course, at some point we will have that little correction to the downside. However, will we reach the 29,519 level first and then travel lower? Or actually, will we see the correction first and then we'll move higher? So, as I mentioned to you guys yesterday when I was covering Nikkei, as long as the index remains above this 27,602 territory, I will continue targeting the upside. Now, jumping into Shanghai Composite very quickly here. As you can see, the index pushed above this key resistance area. Talked about this 3,500 587 zone. And just a quick reminder of what that level was. That's the highest point of January of 2018, guys. So in a way, for now, the fact that it's trading above this area, above this barrier, yes, of course, that kind of gives us a bit more positivity in terms of kind of evaluating the near-term outlook. So in a way, if it continues to balance above this 3,587 zone, well, I mean, my next target here, and for that I would need to jump at something like into a monthly chart maybe, and my next target would be around here. Let me just grab one of the lines. And it's this one right here, the highest point of December of 2015, and that's roughly around the 6,800, 3,685 zone. So roughly around there, guys. And again, it's not a huge distance for this index to make from where it is right now. So that's quite possible. So keep your eyes on that high of the highest point of December of 2015, and like I said, that's roughly around the 3,685 zone. So let me just jump back into a daily chart, and if by any chance the index starts drifting back down here, as I said to you previously, that yes, we could go for a bit of a correction here to the downside, because don't forget that still any move lower up until this upside line drawn from the low of the 19th of March could be considered as a temporary correction before another possible leg of buying. So keep that in mind. But of course, from the short-term perspective, what if you want to have a look at some of the levels here, or let's say if you're trying to capture maybe this little territory right here, what you could do is, well, probably play a bit on this, be a little bit more on the safe side, and wait for a drop below the 3,517 territory right here, which did provide very good support, and so far it's seen as the lowest point of this week. But that's again for now. Now jumping into the German DAX here, and the index yesterday, although closed in the negative territory, still managed to recover somewhat by the end of the trading day, and yep, you can see that it pushed back above this 13,907 territory that I kept talking about yesterday. This level here is the high of the 4th of January, and you can see that yesterday, for example, this level here, the 13,795, acted as a very nice area of support. This level is the highest point of February of last year. So in a way, what we could do now is we could keep an eye on this level, because that could be that area to watch, a break of which could kind of open the door towards maybe a bit of a larger correction to the downside, because don't forget that we're still trading above this upside line. So anything here, any move lower here could be considered as a temporary correction here before another possible leg of buying. But again, we'll keep this short and simple. For now, what I'm going to do here is I'm going to keep an eye on, like I said, this 13,795 territory, and a nice good drop below it may send the index lower. If we take a look at the cash index and where it's currently trading at, we'll see that the price is currently sitting still above this 13,907 zone. It's currently near the 13,957 mark. So let's see how all this is going to play out, because for me to consider the upside, I would need to see a push above this 14,131 zone first, because such a move would confirm a forthcoming higher high. Jumping into another index, and that's the dollar index. Quick update here. The dollar index is trying to make its way higher. So let me just clear up this chart a little bit. Not all of these lines are needed, but as you can see, this level here, the 90.60 zone, is acting as a good area of resistance for now. If I scroll back into history here, you can see that this was the high of the, let me just double check this, the high of the 4th, no, sorry, it's the high of the 5th of April of 2018, guys. So this level so far is providing decent resistance, but if that gets broken again, if we see another pop above it, then it could increase the chances for this index to drift towards its downside line drawn from the high of the 23rd of March. Because don't forget that although in the short run we could see the dollar maybe going a little bit higher here, but if it struggles to overcome this downside line, another slide here could be possible. So keep your eyes on that one. Now jumping into gold, gold here is making its way higher here. This morning you can see that DXY is kind of drifting a little bit to the downside, so gold is kind of picking up on that, and everything so far is working according to the plan that I talked about yesterday. What I was saying yesterday, that in a way, if this area right here, this 18-19 zone, together with the 200-day EMA continues to provide decent support, then we could see a nice rebound here, maybe a push back towards these EMAs, or even maybe towards this downside line drawn from the high of the 7th of August. And if that provides a good hold up, if let's say the bulls struggle to drive the commodity above this downside line, then yep, another slide here could be possible. In order to consider the upside, I would need to see a push above the 1907 zone here first, and then I will get a little bit more excited with the upside. Now jumping into Ethereum, so I haven't looked at this one for quite a while, but basically similar stuff is happening here on this crypto. Yes, also yesterday we had a largest decline this year. The crypto drifted to the 910.11 zone here, approximately around here, guys, where it found support from and it rebounded from here. Today we're seeing a bit of a corrective move here higher. However, probably at this point in time, the best option is to remain careful and cautious, and keep your eyes on the, for example, the highest point of last week, which was around the 1350 level, because all this area right now, right here, and I do understand it's quite a big one, could be a very tricky one. And to be honest, if you're looking for something, let's say maybe at least more medium term, then well, you would need to see at least a breakthrough one of these levels. And probably I'm actually leaning more a little bit, if you're looking for some medium term for the upside, you would need to wait for a break of this 1350 level, and then yes, we could go for some higher levels. But for the downside, again, in the short run, a drop below this, yes, below this 910 zone could open the door towards this upside support line taken from the low of the 3rd of November, and then we'll take it from there. Now jumping into AUD and ZD. So here, I do apologize for the messy chart here a little bit. Probably let's remove all the drawings and start fresh. So of course, you can see that the pair is now trading above all of its EMAs here. So it's trading above the 21-day EMA, the 100-day EMA, and the 200-day EMA. On the other hand, also we do have a nice, or actually I wouldn't say maybe nice, but a tentative upside line, which is quite okay, I would say still. And that one's taken from the low of the 1st of December. So everything's kind of in a way leaning towards the upside. I mean, we are trading above this upside tentative upside support line. We're trading above all the EMAs, so everything's looking quite nice and dandy, I would say. But we do have this area of resistance, this highest point of November of last year, and that's roughly around the 1.0759 zone. So if you want to aim for some higher levels, wait for a push above that area. Ideally, also, I would like to see nice the daily candle staying above this area as well, and then yes, higher levels could be met. So and if we do see such a move here above this 1.0759, my next target is the 1.0894 level, marked by the I believe that's the highest point of October. Yes, that is the highest point of October of 2020. And then we could take it from there. But if you're looking for some downside here, now this is where it could be a little bit tricky. Now, even though if we would see a break of this upside line, still for me to maybe to get a little bit more excited with lower areas, I would prefer to see a drop below the 1.0670 territory right here, marked by the low of the 4th of January. At the same time, and let's say probably by the time this break could happen here, and this drop below this area could happen, yep, we could see the rate already below all of its EMAs, and this could be another extra kind of bearish indication. So that's why I will stick to this level here for now, for the downside, this 1.0669 zone. And yeah, I'll take it from there, guys. But for now, I'm examining the upside. I'm looking at this barrier right here, this 1.0759, and then we'll take it from there. Like I said, I'll pick up on this one if we do get a push above this area, or if we get a break of this upside line. USD Chef, so another interesting one, and yesterday I picked up on this one, and what I was saying yesterday, guys, I will probably just recap what I said yesterday, because the same analysis still remains. For now, from the very short-term perspective, yes, it seems that this pair is willing to travel higher. However, we have this obstacle in the way, the 0.8919 level, which continues to provide decent resistance even today. But if we get a nice pop above it, then yes, this could open the door towards some higher levels. However, don't forget that we are still trading below this downside line drawn from the high of the 28th of September. And if it continues to provide resistance, guys, well, we could see another possible slide. So that's why my upside scenario here is only up until this downside line, and only on a break of this barrier, because if this area somehow continues to provide resistance, well, I mean, we could see a reversal back down straight away. Of course, then if we want to look at some lower areas, guys, one of the levels to consider maybe is, and let me just actually clear up this a little bit here, guys. So one of the levels to consider, it could be this 0.8858 level, marked by the high of the 31st of December, near the high of the 4th of January, and yep, a nice, and this a break of this area here would also place the rate below the 21-day EMA, and more sellers could see this as a good opportunity to step in. So yeah, keep your eyes on that one. Let me just actually maybe recycle this arrow right here. I'll just quickly change the direction. And yep, that's the kind of game plan here for the downside. Now, jumping into GBP JPY, also a quick update. I've talked about this one yesterday, and yep, we are coming close to this area right here, this 141.30 territory. I've mentioned yesterday, guys, that in order to aim for some higher levels, we need to see a nice good push above it. So far, everything's looking quite interesting here for the bulls, but probably the bulls should not get their hopes up yet, because I would prefer to see this one breaking above this 141.30 zone again and staying above it, because if it doesn't stay, if we get another false breakout, well, it's just no good for the bulls. If we do see that daily candle staying above it, then yep, wonderful, good news, and we could then start targeting the highest point of September of 2020 near the 142.72 level. In terms of the downside, how we could play this one out is that of course, don't forget that we are still trading above this upside line, so any move lower could still be seen as a temporary correction. But in order to capture maybe something at least here, what you could do here is keep an eye on the yesterday's low, which is roughly around the 140.35 level right here. So in a way, let's say by the time this could reverse lower and drop below this, maybe this at the same time would place the pair below the 21-day EMA, and maybe more sellers could see this as a good opportunity to step in. In that case, I will start aiming for this 139.48 level, but not lower, because what I've mentioned to you guys yesterday was that this could potentially be forming maybe a range of some sort, but of course that's a little bit too early to talk about. First, let's see what it wants to do with this 141.30 zone. Now, Euro GBP, I haven't looked at this one for quite a while here, guys, and basically let me just refresh the chart here. It's not really one of my favorite instruments and pairs, to be honest, because this pair tends to kind of be less technical, I would say, because it sometimes just has a mind of its own. But again, we can still try and apply some technical analysis on it, and you can see, for example, here this level, the 0.8866 zone, does provide good support. That's the lowest point of September and the lowest point of November actually not the lowest point of November, no, that's the low of November 23rd. So there we go. So basically still this area somehow did provide decent support. For now, looking at this picture, it's a bit of a tricky one. It's currently resting near the 200-day EMA, or should I say bang on this 200-day EMA. However, although it's leaning a little bit more towards the downside, to be honest, for me, given that it's Euro GBP, it's a very tricky pair. I would prefer to wait for a drop below the 0.8933 territory, somewhere around here, marked by the current lowest point of January, and then yes, I'll aim for some lower areas. But at the moment, it's just a tricky one. With the upside, I will take a very conservative approach and also wait maybe for a push above the highest point of January near the 0.9085, and then aim for maybe for some slightly higher levels. Like I said, it's a bit of a tricky one, so I would rather stay safe than sorry. And finally, EURUSD, guys. So here the pair is moving nicely to the downside, or should I say already moved nicely to the downside. It dropped below this 1.2210 zone I talked about yesterday. It stayed below it, so now this morning we're seeing a bit of a corrective move higher. However, I'm still kind of leaning a little bit more towards the downside. But if you want to be a little bit more on the safe side, guys, what you could do here is keep your eyes on this little hurdle right here, the 1.2132 zone, roughly around there, because that's where it found support, and actually 1.2130. Let's kind of round it up here a little bit. So 1.2130 did provide decent support yesterday. That's the low here of the 21st of December. In a way, to be a little bit more on the safe side, you could wait for a drop below this hurdle first. And then, yes, this will confirm a forthcoming lower low, and my next target here could be this low of the 9th of December near the 1.2059 area, approximately around here, and then we could take it from there. In terms of the upside, I would need to see this one pushing at least back above the 1.2210 zone, and then yes, potentially we could go for some higher levels, maybe near the 1.2350 here, which is currently the highest point of January, and then yeah, we'll take it from there, guys. So yeah, that's the kind of little outlook here for the euro dollar and for the rest of these instruments. I hope you found it useful, guys. Really appreciate you joining in and watching this one till the end. So if you want to catch my video later on, my traders tea time as always, 14:15 GMT time. But for now, guys, I hope you have a wonderful trading day. Stay safe and be very careful with the market. Like I said, keep your eyes on the political situation in the world and the whole kind of vaccine issue. And yeah, like I said, we'll take it from there, guys. We'll join my video later on, my traders tea time, 14:15 GMT. Thank you very much, and bye bye.